I'm officially declaring 3 weeks from Tuesday, this coming Tuesday, is the official start of crypto summer. That also happens to be my birthday, but that's going to be the official start of crypto summer.
Mark Yusko, the renowned investor and entrepreneur who founded Morgan Creek Capital Management, a cryptocurrency investment firm, has been a vocal proponent of cryptocurrencies and blockchain technology. He recently declared that the season has turned for crypto, ushering in what he calls crypto summer. Yusko's bullish sentiments come after the recent wave of global liquidity that has boosted the market's value by nearly 50% since Bitcoin's latest crash a month ago. In a recent interview with Blockworks on the weekly roundup episode of On the Margin, Yusko attributed the current rally to the absence of sellers in the market. Despite the unlikelihood of all sellers having left, Yusko insists that a turnaround has begun, supported by several positive factors in the Bitcoin ecosystem. He emphasized that these fundamentals are surfing on a wave of global liquidity that has contributed to the resurgence of cryptocurrencies. Mark Yusko referred to Ether as the digital oil in a tweet from 2021. He also predicted that its value would surpass that of Bitcoin in the future. Yusko suggested that some Ether owners had locked up their holdings in a contract for an extended period. As a result, there could be a substantial amount of sell pressure in the market as they require liquidity to pay taxes. Before proceeding further in this video, make sure to click on the subscribe button below to stay updated with our latest content.
Sellers are gone. All the big leveraged bad guys are gone. And it turns out that I just did a presentation on this yesterday. Hash rate, new all-time high. Number of wallets, new all-time high. Number of wallets with greater than 0.1 Bitcoin, new all-time high. Transaction size and volume, not all-time high, but coming back to being close. And all of those fundamentals are and my point of my presentation yesterday was, crypto summer, surfing on a wave of global liquidity. China printed $1 trillion since October, trillion with a T. Japan, another couple hundred billion. The Fed put 300 billion back on their balance sheet. So, we've got $1.5 trillion of liquidity sloshing around, and turns out people buy things that they like. And there's a whole bunch of people that like crypto, and Bitcoin and ETH are the biggest beneficiaries, but it's going down the ladder. The data is there's more buyers than sellers of ETH. ETH, I think, and I think I have this right, over the past couple of weeks has even outperformed BTC. I mean, it was up 5% yesterday. It crashed through 2000 and hit 2100 very quickly. So I kind of come down on the latter part of your analysis to say, yes, there's a legitimate fear that, people would unlock or de-risk some portion of what they've been staking. But I kind of come to it as there's no evidence of that, right? There's just no evidence in the markets of big liquidations of really anything. And there's some lower level coins that have just been going batshit crazy.
The yield on the 10-year U.S. Treasury note, a key benchmark, rose by approximately 4 basis points to 3.419%. Over the years, fluctuations in the 10-year Treasury yield have been driven by several factors, including changes in monetary policy, geopolitical events, and economic conditions. According to Yusko, the collapse in the 10-year yield can have far-reaching implications for financial markets and the broader economy, impacting borrowing costs, investment decisions, and consumer behavior. Fortunately, the Federal Reserve and the People's Bank of China have implemented monetary stimulus measures and increased the money supply, preventing a lack of global liquidity that could have had significant impacts on the global economy.
I think in the absence of the global wave of liquidity, right? Had China not printed $1 trillion, had, Kuroda-san as his, going away present, not printed another 200 billion, had the Fed not stepped in with Silicon Valley at all with this BTFP, I would be more negative on growth. I would say, negative GDP growth in Q1. I would say negative GDP growth in Q2. I don't see that, right? I see a one handle in Q1. And look, I think the biggest indicator is the 10-year. The 10-year yield has collapsed, right? It's down from 4 something to 3.4, something like that. And that's telling you that growth is decelerating, not accelerating. Yet, if you look at Chinese liquidity provision forwarded 6 months and PMIs, it would tell us that PMIs have troughed and that economic activity is going to rise, albeit slowly. But so I think we're going to avert the hard crash landing. This idea of no landing, I think that's just a silly idea. There'll be a landing.
Many analysts, including Mark Yusko, predicts that the price of Bitcoin will experience a parabolic increase after the halving event. The halving occurs every 4 years, reducing the block reward for Bitcoin miners by half. This feature is a fundamental aspect of the Bitcoin protocol and aims to regulate the cryptocurrency's supply over time. The upcoming halving is expected to take place in April or May 2024, reducing the block reward to 3.125.
We're going to see a parabolic move coming up to the halving, or maybe following the halving. I'm not sure exactly the timing, but sometime between May 9th of this year and May 9th of next year, we will see a FOMO rally just like every other cycle. And I don't know what the number is going to be. I'm very solidly in the camp that every halving we get a zero. 10, 100,000, 10,000. This one's 100,000, and so that becomes the anchor of value. The network increases by tenfold over a 4-year cycle. But you can go way above that. I mean, way. So who knows? At 10, we got all the way to 70. So that was way too high. And then, we never got back to 10. That's interesting.
Despite a shaky economy, high-risk assets like cryptocurrencies and high-growth tech stocks continue to show a strong correlation. This makes it challenging to reconcile the optimism in the crypto market with the overall economic climate. Nevertheless, bulls remain optimistic and are attempting to push the price to the critical overhead resistance level at $32,400. If this level is breached and closed above, it could pave the way for a potential rally towards $40,000. Investor Mark Yusko attributes the market's recent gains to a wave of global liquidity, resulting from central bank policies like low interest rates and massive stimulus programs. That's all about today's analysis. If you found this information helpful, then like this video and subscribe to our channel. We will bring you more updates in the future.